plenty, in fact, in terms of internals to think of with regard to InfoEdge's numbers as well. But that's the conversation we've had. V-Mart, that's the other one. On the back of numbers, we have with us Anand Agarwal, CEO and CFO at V-Mart, joining us. Let me quickly take viewers through the numbers. 23% growth on the top line, margins getting better. EBITDA went up 27.5%. And PAT went up 41%. Operational efficiency clearly playing out, and EBITDA margins got 50 bips better versus the last year. Very quickly, Anand, just give us your perspective. This 9% kind of SSSG growth, do you see a better traction coming our way? Of course, it's a strong number already, but does it improve as the festive season comes our way?
No, sure, Sajid. I think we are on the right tracks. We are doing quite robust. We are doing quite well. The macro is helping. All the efforts that we have taken in the last couple of years are playing out well. Not too much of surprises. We were really skeptical about how the geopolitical risks are going to play out, how the inflation risk is going to play out. But thankfully, I think the country has been able to manage that part quite well so far. So the inflation-linked issues that we were foreseeing in terms of consumption contraction have not really come out so much. The monsoons have also not played so much of a spoilsport so far. So we still remain quite buoyant and optimistic on how we see the year ahead. Quarter two still might be a low quarter because of the festive shift from this year. All the festivals are shifted by 15 to 20 days forward. Pujo comes into quarter three this year. But apart from that timing shift, I think on the overall trajectory, I still remain quite positive and buoyant on how the trajectory looks like.
And how do you look at the forthcoming season? Because you have festive seasons now starting off from August end onwards. What's the kind of the outlook that you have with respect to the growth that you're going to see? And is there an inflationary pressure coming in? And have you able to pass on that to the consumers?
So there has been some amount of inflationary pressure as far as raw materials are concerned. So a lot of our products, especially the winter product, the winter apparel is slightly heavier, is more man-made fiber based. So definitely there was a lot of risk and there was a lot of challenge in procurement of that part there. But so far we've been able to manage that and mitigate that quite well. So far we have not really taken up any price increases. But I think during the year and latter part of the year, we will see little amount of price increases, but nothing substantial. We are a honest price value retailer and we will want to pass on the best benefits to the customer. So the growth will, a large extent will come through volumes, and volumes therefore need to substantiate the right pricing for the customer. So I'm not foreseeing a very significant amount of price increase, maybe 3 to 5% or 6% here or there in selected pockets, but not anything substantial. The demand patterns, as I just said, I think will right now remains robust, right now remains buoyant, and I'm quite hopeful that we should be able to see a good festive. But quarter two this year should be a little bit depressed because of the festive shift, as I just mentioned. But I think on the whole, the festive period still looks quite positive.
And raw material prices, in your con call, you indicated that they've inched higher and that will likely have an impact on margins as well. While that's not visible for the moment, if price hikes aren't going to come your way in a significant fashion, how do you expect to cushion the kind of raw material price increase you're seeing?
So we've been able to do a lot of value engineering around the products. We've also been able to tweak some of the products in terms of what we buy, from where we buy, and a mix of all of that for the upcoming season. See, the upcoming season, the festive season, as well as the winter season is a very peak part of our year calendar. And most of our purchase happens around this time. At least the arrivals happen around this time, while the purchase orders are blocked at least 3-4 months prior. So all the hard work has already been done. The heavy lifting has already been done. So we are quite assured in terms of what is the pricing that we are getting, and therefore what is the price realization I am expecting. Barring any unseen situation because of the negative impact of the monsoons, because coming into the demand contraction, I'm not looking at any significant price increase or any impact, a significant impact on the margins because of the sourcing risk so far. If it plays out any further, if we see it, if we see the geopolitical problem going ahead even into the next year, then that's a separate story. But as far as this festive season is concerned and the winters are concerned, I think we are fairly well covered.
And how do you kind of evaluate the way you've done on ASPs? Because that 1% lower ASP to around 393 odd, even though your sales per square foot, which is the better metric to look at you, has gone up healthily at up around 7% odd. But the ASP is coming off. What explains that?
So ASP 1% here or there is not really much of a concern. So we are actually looking at slight increase in the average selling prices. Apparel is our 80% business, and the apparel ASPs have actually been inching upwards. So the rest of the products comprise of fashion accessories, FMCG, and stuff like that, where the volumes can differentiate the ASPs to some extent. But apparel ASPs, we are fairly confident that we are holding up. And in light of the price increases or the raw material price increase, I'm not looking at any drop in the ASPs going ahead.
And what about store count growth? You're looking to add around 90 stores, I believe gross 90 stores this year. You've done, I believe, 15. Is there a conscious calibration in Q1? Will Q2 be faster in terms of the number of stores you open? What's the kind of clip?
So actually, we just opened our 600th store yesterday.
Yes.
So that marks the 24th store this year. So we've been very, very calibrated, very disciplined in terms of the kind of stores that we want to open. We're just not looking at a very aggressive growth in terms of store count. We're very, very disciplined in terms of making sure that every store that we open is profitable, preferably from the first day or the first month itself. And that's been the track record that we have maintained for the last 25 years. So 90% of these stores that we have opened have become profitable in the first month of their operations. So we're very, very careful in terms of what kind of stores that we want to open, where do we want to open, what size do we want to open. So we're just not looking at very aggressive growth. But having said that, I think this year we should still see at least 90 stores net of closures open up. So probably a gross number of around 98, 95 to 100. But net 90 stores, I'm fairly confident that we should be able to open up. Q2 and early part of Q3 should see slightly more openings as we prepare for the festive season, and we would want to open more number of stores just before the festive.
Okay, thank you so much for coming in and speaking to us, Anand. A pleasure talking.